Hey there, everybody. Thomas Wood with Basecamp Trading. It is Friday, August 25th, and today we're going to talk about something a little bit unique here, and we're going to go into a little bit of the underlying fundamental reasons about some of the price action we've seen here in the energies over the past couple of days, because we've had a really wild ride with the hurricane coming in towards Texas. So first thing you need to understand is the hurricane, where it's going to be hitting in Texas, I think they said that it's about half of the refineries, oil refineries in the United States. All right. So there is a lot of the oil a lot of the production of things like RBOB and heating oil that are derived from crude oil, or derivatives of crude oil, are created there. Now, as this hurricane's coming in, what they have done is a lot of those refineries are shutting down. Okay, so this is kind of a supply and demand equation. So if you look at what's happened here, yesterday crude oil dropped through the floor. We broke through the trend line. Today we haven't gone anywhere so far. And then if you go and look at something like RBOB, which is unleaded gasoline, we jumped the day before yesterday. We ripped higher yesterday, and we jumped again over the night session quite a bit. Okay, I mean, it took off through the roof, and now today it's fallen back to the floor. And if you were in the trading room, we nailed the top in RBOB, trading pairs with correlated pairs with crude oil, RBOB, heating oil, trading the crack spread. But that being said, the reason that we had such a separation here with markets that are typically highly correlated, crude oil, RBOB, and heating oil typically move relatively the same because RBOB and heating oil are both derived from crude oil, is because if you think about the supply-demand equation, if they're shutting down the refineries, the supply of RBOB or of gasoline is going to be dropping. They're not producing as much, but the demand is going to stay the same. Okay, so less supply, same demand, prices will go higher. Now, the exact opposite type of thing is happening or happened with crude oil. If you look at what crude oil did, we had less demand because the refinery shut down, so they're not bringing in that crude to process and refine into gasoline or heating oil or anything else. The demand dropped, but the supply was the same because they didn't cut production nearly enough, and crude oil prices stagnant today and dropped yesterday. Okay, so you had this separation. Now, when this type of thing occurs, it's good to understand why this is happening. Again, the hurricane's coming in. They're shutting down the refineries. That's what caused this. Two, it gives us a very good opportunity for what's called volatility arbitrage. And this is a way of trading where you're trading correlated markets against each other, and you're taking what's considered a market neutral position. So one of the trades that we had in the trading room that we put on yesterday, added to today, and worked out really, really well, is we were short RBOB and long heating oil, which are two correlated markets. So we were hedged, whether it went way up or way down. We were going to make money on one and lose money on the other. But at the same time, you can see we were short RBOB, and RBOB fell through the floor, and we shorted it again earlier this morning. And if you go look at what heating oil did, heating oil, not anywhere near as much of a down move. So we made a bunch of money on RBOB on the way down. We lost a little bit of money on heating oil on the way down. Overall, come out very net positive. Okay, so this type of thing, when prices that are typically correlated separate and go their own way, a lot of times it gives you a great opportunity for volatility arbitrage, which is a relatively safer, generally considered a safer way of trading. So great job to everybody in the trading room that took that. I hope this helps you understand a little bit more about what happened and what's causing all this crazy volatility that you're seeing. I mean, the RBOB swings, for example, you're talking from yesterday's open, we were at 1.62. We went all the way up to 1.74. So that's 1,200 ticks at $4.20 a tick. So you're talking $5,000 a contract worth of a move. That's a really big swing. So again, that's it for today. I hope this helps you with understanding exactly what happened, why it happened. Hopefully it'll help you with identifying new trades in the future. For those of you that want to learn how to trade this way, it's one of the #1 ways of trading that we use here at Basecamp Trading. We do volatility arbitrage, pairs trading, correlated pairs, spreads all the time. So go ahead, go to the link down in the description. You can get signed up for a 1-month trial. Don't forget to like and subscribe if you're enjoying these videos. I will see you in the trading room next week. Have a great weekend, everybody, and enjoy that Mayweather and McGregor fight. We'll see how it turns out. Until next time, happy trading.